Good evening, guys. Today is October the 6th. It's about 5 o'clock here in Seattle. I thought I'll just do a quick review of where we are from a week on the NASDAQ market, because that's the market I follow the most, and then do a quick review of one of the stocks that popped up in my radar second time on the screener. So I thought we'll go through a five-step process. Okay, let's take a quick look at the markets overall, starting with the NASDAQ index. Had a very good end of the day. So up 211 points, 1.6% for the day. Very strong reversal from a morning down. So if you look at the daily chart on the NASDAQ, you can see a new higher high being formed and higher low being formed. So this is the start of a new trend, hopefully. We just need to see a couple of more days of follow through. And if that is the case, then this has been hopefully the bottom and we should head up this way. I don't think so, but I'm hoping so. Let me put it that way. I'm hoping that this is what happens. Most likely it's going to chop a little bit, come down. I don't see it going back all the way to 1446 anytime soon, but you never know. But the good thing is to be aware of where the market is right now and expect that there will be a time where it would get a chance to be able to go away from where it is. So this is the expected move, but not really sure where we end up. Let's hope for it. And let's see where we will end up in the market overall. That's my thinking anyway. So one of the stocks that popped up in my radar today was a stock called CLS, Celestica. So see the uptrend here on the Nasdaq index. So after a bunch of downtrends, we are ready to go for the next level. So CLS, Celestica was the one that came up on the radar. Let's go through a five-step process, see what we find. I always start with the fundamentals, as you know by now. Financials first, revenue, and on growth on an annualized basis, and then I go quarterly. So on a growth, let's see why it's showing up. 8%, so 2 billion, 2.8 billion, grew about 5%, 20. Oh, this was a good growth, and then reduced in 2019, and then has been consistently in the 27. So it's slowed down. Growth has slowed down a little bit. Celestica actually makes electronic and semiconductor supply chain solutions, equipment manufacturer actually. So a lot of different players. So Celestica, JBL also showed up, Jabil Circuits, which we covered a couple of days ago. So both of them seem to show up. So they're doing about 5 billion, 5.6 billion in revenue 2022 on an annualized basis. Oh, I'm sorry, that's not the revenue, that's the income sheet. Yeah, they're doing about 7 billion in revenue. So they grew, reduced, came down, seemed to go back on a growth trajectory, did a poor year in 2021, and then now back on track, 21% growth. So they seem like they're going in the right direction. This seems like another 16% growth for the next 12 months. So we look at it from a quarterly basis, yeah, 16, 15%, exactly what I said. So they seem to be going on the right trajectory. Their growth has dramatically slowed down though. So you look at it, it went up all the way to 35% and then slowed dramatically down. So not sure why it would still show up, but seems like it is one of the stocks that is hitting a new high. So let's see why. Balance sheet wise, they've got about $5.5 billion in the balance sheet, about $700 million in debt. Usually I also look at total current assets, which are about 4 billion, which typically tends to be in short-term instruments, cash, receivables, things of that nature. And then non-current assets, long-term investments, they don't have too much in long-term investments. Interesting. I would have put a little bit more given interest rates where they are right now. But liabilities mostly should be on their debt and the interest serving on the debt. So servicing of the debt is probably one of the big things on the liability. If you look at their overall price to earnings, seems a very reasonable 19. Since they don't have very high gross margins, 9% gross margin. Okay, that's not great, but they have a decent net margin of about 2.8%. So if you look at it overall, the company is doing, as we looked at, about 7 billion in revenue, and they're valued at roughly about 3 billion. So half of that. Interesting. Probably because of this low margins. The margins are really low at 9%. Look at this. On their income statement, you can see that of the nearly $2 billion in revenue, 1.8 billion is actually their cost of goods. So very low margin business, 9% margins. That's not the greatest, but okay, as long as they are consistent about it. And look at that. This is on the weekly. So let's go first to the monthly chart, see what we find in terms of trends here. First, you're trying to find stage. So just to give you a context again, I'm going to go through this again and again just so everybody gets it. This looks like a stage 1, stage 3, and then a downturn. And then they didn't have much of a movement here, but then very good stage 2, which is ascending, and then consolidation period somewhere over here, which seems like a stage 1 again, and then a stage 2. So they're definitely in a stage 2 higher highs, higher lows, and just a rapid ascension. So stage one is they're building a base. Stage two, they're trying to be able to grow rapidly and very quickly. Stage three is typically distribution, and then stage four is decline. So they're definitely in a stage two, which is the good stage to be if you want to see it. Wish we had caught this move, but this is also not a bad move. That's probably the reason why. Fundamentals wise, it looks like the reason why the stock is starting to do well, probably because of low expectations and low PE more than anything else. They've gotten beaten down, and now they're coming out of a consolidation phase, ready to move on to the next. Look at this. This is a very good. So this seems like it has a very good breaking through a barrier. A big barrier here was in the 14 range. It's broken through the barrier very significantly in the last couple of months or so, few months, and then ramped up all the way, I think, in the March-July timeframe. So since July, interesting, in the last couple of months, when every other stock was not doing well, it's just been going up and to the right. It's gone from $14 to nearly $26, which is significant. So that's one good, I would say, broken through resistance. So it hasn't yet formed a very good area, but this would be another area, probably go touch back here before it goes up. That's what I can see on the long term. Let's draw some lines just to be able to get a quick sense. This seems like a good point to see where it would go from here. And then this is the low. So yeah, it's definitely heading towards up and to the right, kind of an ascending triangle location. So you look at it overall on the monthly chart, don't see anything dramatic in terms of red flags, but this is a beautiful flag pattern on the weekly chart. Sorry, on the monthly chart. On the weekly chart, this is a beautiful flag pattern. A flag pattern typically means it's had a very nice green candle, and then it forms kind of a flag, as you can see there. So this usually means it'll come back, touch short here, and should go up. So where would it expect? You should expect it to do something like a little bit like this, and then a little bit like that, move up. And then if you look at it overall on a long-term chart basis, there are lots of other places where it could go from here, but a next logical stop seems like the 34 area. That seems like a possible resistance, given even 30 seems like somewhat of a resistance, but 34 would probably be more of a logical area of resistance. We'll see more because it's a multi-year. The last time it even hit 34 was in 2002. So this is a almost a multi-decade high for the stock after a lot of consolidation and chop and churn. So that's one of the things that you would find. All right, I'm going to remove both of these just to show you what it would do. Let's go now to, we've seen the weekly chart. Now let's go and look at the daily chart and see what we can find in the daily chart and how would we trade it. So it's a bull flag pattern on the weekly chart. Now let's go to the daily chart. Still an ascending stage 2. That's beautiful. So it's actually done a very nice. Actually, there should be a green candle, but on the, it's still a nice post-earnings flag, but not a green flag, a red flag. So it closed a little bit lower than when it opened, but still a good flag pattern has developed after earnings. So this seems like a good pattern over here that is developed. So you should probably find some kind of a support again for it if you want to be able to do a back test. You'd probably do a back test in the 22 range. So 26, you'd probably do a back test in the 22 range. You could even do one in the 23 range. To 23 to 24, 22 to 23, sorry, would be a good zone to look at. See this in this zone. I'm just going to draw that for all of us and say, okay, if it comes somewhere in this range, it's probably going to back test to that side. Let's draw it. Yeah, it's going to back test somewhere over here and then move up back again. Would be my expectation. So nice bull flag pattern formed. It's been having higher highs, higher lows, consistently moving in up and to the right, good direction. That's a good sign. It should touch back somewhere in the 23, 22 zone and then head back up again into the next multi-decade actually highs, which is 30. So that's Celestica. Watch this stock because it's been actually hitting new highs on an annualized basis. So it's a 52-week high, definitely, that has been hitting consistently over the last few days. So expect it to take a little bit of a break, but then this should continue in the right direction. Thank you guys for watching. Have a great rest of the weekend, Saturday and Sunday. I'll see you guys on Monday. If you have any questions, please comment, drop me a note, like and share and subscribe to this channel. Appreciate it very, very much.